Web3 TV.
Hello and welcome to another episode of Web3 Talks. I'm Lisa Amnegard, and today we'll be looking into how you can get access to some of the most exclusive investment opportunities through tokenization of real-world assets, a sector that is set to hit $4 trillion by 2030. And to get some more insight into how this will play out in the UAE, we'll be speaking to Scott Teal, founder of Tokinvest, a trading platform which is not only VAR compliant, but also is unlocking opportunities to some of Dubai's most exclusive real estate opportunities, fine art, and other assets. So thank you so much for joining me.
Thank you very much, Lisa. Great to be here.
How's your day been so far?
Day's been good. It's been a busy year.
Yeah, it's been very busy, and there's a lot of hype around tokenization of real-world assets. And you've been working both on the VAR framework itself, but also founded a company where you can buy, sell, and manage these assets. So first of all, I want to ask, is tokenization the future into how we will invest?
I mean, obviously, sitting here, founding a company in this space, I believe so, yeah. I mean, this has been a journey that's taken a number of years for me, my background in law. This for me was the digital transformation of what I was doing as a lawyer. It's a way of putting rights into a digital format, and that digital format is the token. And like all digital transformations, the ability to transition into something digital then allows you to play new and interesting games with those assets. So fractionalization, collateralization, trading, all of the things that will then flow as a result. So yeah, we absolutely believe that this is going to be the future of not only financial products, which is where our focus, but indeed lots and lots of rights related activities. And what's very interesting after kind of being on this journey for 6 or 7 years now is the world's really starting to realize that is the case.
We've all been talking about this for quite some time. So why are we so excited about it now?
Well, let me start with a flip question, which is actually a piece of thought leadership we'll be bringing out early in the new year, which is entitled "Where Are All the Tokenized Assets?" Because you're right, we've all been talking about it. We've been talking about it for a number of years. I've been speaking to lots and lots of asset owners that are very keen to do this with their assets. I know lots of people on the buy side are very interested in participating in these assets in fractional ways. So the world's wanted to do this. So why hasn't it really taken off yet? And you mentioned in your intro, one estimate of the $4 trillion worth of assets going on chain. You can find any number of forecasts, 30 trillion, 60 trillion. Yeah. There are lots and lots of big numbers floating around there, and a lot of those numbers point towards by 2030. Well, given the amount of tokenized assets that exist today, there's a lot of things that have got to go on chain between now and then. So where have they been, and why hasn't that happened? The short answer, and this is really the journey I've been on, is the traditional financial services regulatory frameworks have needed to evolve. They weren't fit for purpose for this new technology, for this new way of creating financial products. And I moved here to the UAE as part of the process. I was fortunate part of the team that helped with the development of the VAR regulatory framework. And as part of that journey, I then said, well, this framework now does allow us to do the things that we all wanted to do. And hence we moved here and set the business up in this particular market. Because in most jurisdictions around the world, it's still either very difficult, expensive, or actually in many cases still not possible to issue a tokenized real-world asset, many of which would fall into the traditional definitions of securities or collective investment schemes. So the problem, there's been a market need for this. The technology is ready for this. The problem has been the lack of regulatory clarity around how do I actually do one of these things in a legally compliant manner. And that's what I think we've now solved here in the UAE.
So exactly how does that framework look like, and how will tokens exist within the VAR framework and UAE regulations?
Yeah, so it's a complex question, so I'll keep it at a relatively high level. But essentially, like all regulators in this space, the traditional activities are regulated. Unlike, I think, some markets where they've attempted to regulate the technology or the assets themselves, they're actually regulating the service providers. So a unique aspect of the framework here is that all virtual assets, as they're called, virtual assets covers cryptocurrencies, NFTs, commodity tokens, security tokens, anything that is in tokenized form on a blockchain falls within the same definition of a virtual asset. And that's a pretty fundamental departure. For me, this is hugely important because when I look at the frustrations that have existed in other markets, it starts with, well, I want to do a tokenized offering of these particular assets or rights. Which is my regulator? Is it a commodity? Is it a security? Is it unregulated? And that lack of certainty has actually created a lot of problems with adoption of this technology and tokenized assets. So that clarity is really, really, really important. As with traditional financial regulators, you are then regulated, like Tokinvest is obtaining its final stages of obtaining its broker-dealer virtual asset service provider license. That allows us to market, distribute, promote, and provide secondary market OTC trading for virtual assets. So that bit looks quite familiar, but the framework itself has been specifically designed to deal with bundles of these rights in this new and interesting and highly liquid digital state.
And that's really interesting that you say, because there are many companies right now, especially if you go to, let's say, the Bitcoin MENA conference or any sort of conference where they're launching businesses that are going to tokenize a bunch of assets. So does this regulation apply to any asset that somebody wants to tokenize?
It does, yeah, absolutely. So VARA covers, as I said before, all virtual assets. So if you're wanting to provide any of the regulated services, brokerage, marketing, support, distribution, exchange, custody, advisory, any of those kind of activities, yes. I think one of the interesting things is that this is the collision between Web3 and Web2, and it's a collision that I've been actively trying to be part of for a number of years. Web3 really just got going in an unregulated way. Bitcoin just appeared overnight, and everyone was like, "What is this?" And for a number of years, nobody took any notice of it. Then it grew to a very large asset class, and then exchanges started appearing, and people started doing things. But the history of cryptocurrency is one of an unregulated asset. There's been debates around the world. Are they regulated? Should they be regulated? Are they illegal securities? And different regulators in different countries have different views. But the truth is that the Web3 industry got going essentially in an unregulated framework environment, whereas traditional finance is it's the most heavily regulated environment, where you are engaging in investment-related activities and issuing products that represent rights that hopefully are going to generate returns for people. So you've got the sort of unregulated world and the most regulated world kind of now merging in the middle, where you can take all of the benefits of this amazing technology, which is far more efficient than some of the legacy systems that underpin TradFi, but with benefits of investor protections and traditional finance regulation. And it's that confluence that's the most exciting thing. Now, you referred to going to the conferences and seeing people talking about what they're about to tokenize. Most of them we think are probably either not going to do that or will find it very difficult to carry on doing that. What we've seen, particularly with the marketing regulations and some of the enforcement that's occurred here in the UAE, is the regulator's very alive to people turning up at conferences and talking about tokenizing real-world assets, when really what they're doing is talking about a regulated activity for which they don't have a license. So this is a market that's ahead of that game. We are still seeing it. If you go to Southeast Asia, there's any number of unregulated tokenized real estate offerings, for example, which I think is a problem for the industry and is a problem that will be resolved through enforcement.
So what are some of the requirements for a company that, let's say, wants to get into tokenization of real-world assets? What do they have to fulfill to meet that compliance? Yeah,
there's a couple of different paths, and I think that this is an area where there's probably an ongoing education piece in the market. As a broker-dealer, we were established primarily for the purpose of helping people take their assets, break them into fractional rights, and then issuing them as regulated tokens. So as a broker, really what we're trying to do is help those people who are saying, well, I'd like to do a fundraising or to release equity from an asset I have, or to do some capital raising about a project I'm going to do, by giving people rights. And these are not fundamentally different to the way that project financing or acquisition or traditional financial products, like mortgages in the case of real estate, exist. The difference now is it can be done in smaller bite sizes by more people. So it's almost like a crowdfunding, but for financial products type of strategy there. And so that really opens up a whole new marketplace for products to be created that don't look like what we've seen, and for people to participate that historically have not been able to.
If you were to say, this is what tokenization of real-world assets solves, what would that be?
For us, and there's many different versions of this, and you mentioned BlackRock and they have their version, and to me a lot of that's around efficiency. It's around bringing this new technology into existing traditional financial markets and products to create efficiency, and that's a laudable objective, but it isn't ours. For us, it's about taking the world's most desirable assets and making them available to everybody. It's about, our slogan on the back of our T-shirts, as you saw, let's own what the 1% own. that's what it's all about. And a combination of the technology, the regulatory framework, and the products we'll bring to market are going to achieve that. Because for me, and I've had this argument with regulators around the world. I've been on this journey. I've been in sandboxes in multiple regulators in many countries around the world. And usually if you want to see a regulator squirm in most parts of the world, you use the word retail investor. They don't like it. Financial products have typically been the domain of accredited professional, let's call them what they are, rich people. Yeah. For us, that doesn't necessarily seem right, that only rich people should be allowed to buy interesting, high-yielding assets that they want to buy. And no doubt we'll come back onto real estate. For me, that's a great example. It's something that not everybody can afford to buy a whole one of. And so being able to say, well, this is something people want to buy, can we give them access to a piece of it? And that's really the thesis around our kind of reason for being.
In your opinion, because you were mentioning that you're going to tokenize some of the world's most exclusive assets, is then tokenization a security?
That's a question that really depends country by country. And as a lawyer by background, I immediately start twitching at such things. But yeah, typically in most jurisdictions, fractional investments in a whole would fall within the definition of a regulated financial product, whether that's a security or a collective investment scheme or a managed investment scheme. And again, different markets, different regulators in different countries have different, words they use to describe those things. But for me, it's really simple. Is it an unregulated asset like what we've seen historically with crypto and with NFTs, for example, or is it a regulated asset which, fractional representations of real world things will definitely fall within that more regulated category. Now, again, under VARA, they've done away with that distinction because a lot of the technology allows you to create products that have a habit of looking like different things at different times. Even cryptocurrency, it looks, when the original ICOs were done, they looked like they were being used as a fundraising instrument, which is typically something that is regulated. But then the next day they were being used to pay gas fees for a network. Well, now it looks like just some money, which isn't a regulated asset. So the technology itself allows for the creation of products that don't behave in the nice traditional buckets that TradFi has set up. And it's why I'm such a big fan of the VARA framework, where they said, let's stop pretending we can pigeonhole this new tech and let's just regulate all of them in an appropriate way.
Many people are very optimistic about the VARA framework, hence why many of these companies are coming to the UAE. But I'm interested to know a little bit more about Tokinvest, how this will play out for the customer experience or the user experience.
Yeah, great question. We've spent a fair bit of time this year thinking about the user experience. One aspect is the importance of making the technology somewhat invisible. There are obviously people who are very crypto savvy, the degens, people who are very used to dealing with their own, self-storage of wallets and private keys and virtual asset management. And there's a whole universe of people that are very comfortable with that, and trading in, it gets even more difficult than trading on centralized exchanges once you start looking at DeFi and other activities. The reality is we're trying to create a user experience that means you don't need to do, a degree in blockchain to understand how to use it, just like you don't need to understand how electricity generation and transmission works in order to flick a switch and turn a light bulb on. Yeah, so our interface from a user point of view, both as an issuer, but also perhaps more importantly as an investor, is a very Web2 experience. It's a typical login, it's a typical AML KYC, as you would expect from a regulated platform. And then you will be presented with assets that you can make a decision around. Now, to bring some of the Web3 kind of feel to it, it's going to be a much more informative, user-friendly interface in terms of information about the asset, pictures of the house you might be investing in, for example, rather than the typical traditional finance kind of green screen, just trader type screens.
Yeah.
So it's kind of the hybrid of the two, if you like, but without the need for people to actually deal with some of the more difficult user interface aspects of Web3.
One asset class that many have been talking about is real estate. So, in your opinion, why should real estate be tokenized?
Let me answer the question with a question. Why should the vast majority of people on Earth not be allowed to participate in the most desirable asset class that there is? Because that's the truth of real estate. We're now living in an absolute global housing affordability crisis. When I talk to my nieces and nephews about, they're kind of late teens, coming 20-something, they've almost already given up any aspiration of becoming homeowners. This is a market that is taking off at a pace that even if they started diligently saving, the need to save a deposit, and even as they save, the property markets are typically moving away from them at a rate that they're not even keeping up to get the deposit. And so we now have a kind of a disenfranchised, kind of generation coming through that doesn't believe it's going to be able to participate in this most kind of fundamental of asset classes. And it's not only as an investment, but also, let's come back to Maslow's hierarchy of needs. This is shelter. This is the place where we live. This is the place where we keep our families safe. So it's an incredibly emotive, and important asset class. And so being able to give people the opportunity to start saving in the asset class that they're aspiring to eventually have their own whole one of is something that we're really thinking quite deeply about and feel very passionate about. Because if you're saving in dollars, now dollars are depreciating. That's what they do. They call it inflation. The other way of looking at it is deflation of your dollars. That's what's actually happening. So you're saving in a depreciating asset while the housing market's doing this. This is not a great situation for getting, people on the property ladder. But if you can start saving in incremental pieces in the same asset class, even if those asset classes do go up and down, and property markets rise and property markets fall over the piece, they typically rise. But even if it falls, well, you're moving in the same, you're effectively investing in the same asset class you're heading towards. And so for us, it's such a wonderful opportunity to use tokenization and this new regulatory framework to allow people to sort of get their foot on the ladder of this asset class that they have aspirations in. Whether that's, so that they use it as a way of buying the deposit, whether they, will have different products that we're looking to bring to market, whether they can eventually save enough that they can turn it into a whole property, whether they just use it for their deposit, whether they just use it as an investment. But for us, this is such a, everyone wants to own a property.
Yeah.
We all live in one.
Yeah.
We all wish we owned one. And even if we own one, we might like to have a second one as an investment. But the ability to now do it in pieces rather than wholes is a huge opportunity, I think.
And people can sort of learn how to invest as well, in a way, because they're only investing in small pieces.
And with that comes the ability to do things like portfolio building. You can start thinking about, rather, because maybe you save up and maybe you buy one. That's fine, but you've kind of all eggs in one basket. Does that area happen to rise and fall? You can actually start coming in smaller bite sizes and being able to say, well, I'll have a piece over that part, and I hear this area of town's about to get a new airport, for example. Maybe I'll have a piece over there and, whatever else it might be. So you can start using this as an opportunity to portfolio build in a way that it was kind of a all or nothing type single investment.
But this you can already do through REITs. So do you really need to do it on blockchain?
Yeah, REITs are a way of fractionally investing in real estate. I've never heard anyone speak with passion about their REIT. Most people who I know who have a REIT have it as part of a well-organised, retirement strategy. There's nothing wrong with it. Typically, they're commercial real estate or industrial real estate assets in there. Most people don't know what those assets are. They are a blend of things. And so I'm not criticising the REIT, but it serves a certain investor of a certain size and with a certain appetite for risk. It's very different to being able to say, go and look at, there's a new release here in Dubai, for example, one of the most exciting real estate markets on the planet. Being able to say, here's a new release coming. I really wish I could own one of those. I can't, but maybe I can own a piece of one of those. That emotive connection and participation, I think, is very, very different. And so it's not, I don't see this in any way as replacing REITs, but most people I know don't own a REIT. And even if they do, it's probably buried in a pension fund of some sort that they haven't really worked out what that wrapper even is. So it's very different, I think, because of the immediacy and connection to the actual specific asset that you're able to invest in.
And that's true. But if we look at just how we purchase real estate today, it's a very offline experience. And there are many parties in place. For example, it needs to be registered on the land registry, and you have a broker, and you have an agent, and there's many different parts.
Certainly are.
So, in your opinion, how will these actors play a role in this? For example, what role will the land registry have if it's not on the blockchain?
Okay, complex question. And I think there's two answers to it. Firstly, land registries the world over are not ready for fractional tokenized rights that are able to be trading in real time and updated at land registry. I think we will head towards that future, and when we're involved in conversations with land registries in different parts of the world where that is definitely an ambition. So I think we are going to see a future in which direct ownership of fractional rights can exist at a land registry, but that's not coming immediately, and it will take some time. In the meantime, what we're looking to do is to create the ability to invest in assets without having to interact directly with land registry. And again, there are many ways of doing it. You mentioned REITs. When you buy a REIT, your name doesn't appear on land registry. You're buying a wrapper. In that case, it's a real estate investment trust, but you're buying a unit in a wrapper. That wrapper itself is the thing that will typically then own at land registry the various real estate assets that are in there. So it's the same kind of concept as you don't need to be recorded at land registry, the owner of this fractional right. I think in the future we will, but that isn't available today. But that doesn't stop you getting access to this fractional piece of real estate that you want. And as an investor, someone who's saving for that house, what do you really want? What's the thing you really, really want? There are two economic levers I see with real estate, primarily. I mean, you can build in utility rights and there are future timeshares and various things, but fundamentally as an investment product, yield, capital appreciation. Am I investing in a product that is generating income through rental or whatever it might be? And can I have a share of that? And at a certain point in time when the property is, for example, sold, hopefully for more money, I get a share of the capital appreciation. Now, those are the types of rights we're embedding in the tokens, tokens are digital contracts. They're enforceable contracts, they're digital contracts, and they're the rights you can have. But you don't have to have your name at land registry, and nor do you actually in lots of traditional financial products that happen to derive their return from underlying real estate assets.
And why don't you need your name to be registered at the land registry to prove ownership?
Because you have a contract with a counterparty that is, either a regulated issuing entity. So, for example, we have different models, but we ourselves, Tokinvest, anticipate being a counterparty for some of these products. So you have a contract with a regulated counterparty who owes you the economic returns of the underlying asset. And so it's the same with the REIT. You have a contract with the real estate investment trust. It's called a unit, but that's what it is. It's a form of contract. And so that's where you derive your returns from that contract.
And in terms of just the contract itself, even if, let's say, the smart contract is on the blockchain and let's say something happens, is that contract enforceable in the legal system that we have today?
Yeah, I mean, it's actually it's a question I often see, and I'm always surprised by the question. In a way, we've seen the evolution of digital contracts in many forms, from shrink wrap licensing, click wrap licensing on e-commerce platforms, the use of electronic signatures on things. This is just the next evolution. So the intention to form a contract and the terms of the contract it's a relatively straightforward issue. As part of the onboarding of investors onto these products, they get an opportunity to review all of the relevant terms and conditions associated with it and accept them. So yeah, it's not a great leap from what we've seen in terms of digital contract formation over many years.
Yeah, I think it's really interesting because usually when you invest in an asset, you own the asset. So what would you legally be buying and legally owning?
You would be legally buying the right to whatever, and again, it depends on the product that we create. But let's imagine a piece of off-plan property, because it's pretty exciting. Let's imagine we buy a piece of off-plan property today, and in say 3 years from now it'll be built, and then we resell it. That type of product, you can get rights in those types of products, such as they may be, whether they're economic returns or otherwise.
So you would have an interest in the property.
Yeah, exactly.
And typically, in terms of how much investors could make in investing in tokenized real estate, what would be sort of the returns? It depends.
It depends on the product. It depends on the performance of the market. I mean, like any financial product, it really depends on what actually happens with the underlying property market, if it's property, or the gold market, if it's gold, or whatever it might be.
And in terms of investing in real estate, tokenized real estate, what should investors be looking at? Because how do you know, for example, we have some understanding over some developers that have credibility that it's good to invest in that sort of product, but how does it work in tokenization of real assets?
No difference. We as a principle, and we're not talking about specific products here that we have on the market, but as a principle, we work with the best assets in the world. Now, when you start talking about real estate asset, that means the best developers, the best locations, the best units in the best locations. So we have that principle of how do we bring the best asset to market for people to acquire, and there are those various components to that.
And also when we look at, let's say, Dubai's property market, there are many projects that launch and they sell out within hours and minutes. Yeah. And so although tokenization of real world assets is intended to make it more accessible to more people who previously could not afford, let's say, a apartment in the Burj Khalifa or something like that. But wouldn't this also lead to some kind of affordability crisis if you're opening up, if let's say BlackRock comes and purchases majority of the tokenized, the tokens of a certain property, wouldn't it lead to an increase in price in the property market?
I don't think so, because again, you're talking about large institutional investors coming in and buying up all the property. Well, they can do that today, like making property available in fractions. I'm not sure those investors would even be interested in coming in and buying up fractions. Well, they can come in and buy whole ones today if they want.
And in terms of, if we look at also other tokenized assets, where do you see the most potential?
Yeah, so we're working with a range of asset owner issuers. So funds are an interesting one. They're already kind of tokenized they're fractionalized in a sense that you buy a unit in a fund. So we're obviously looking at bringing some of that efficiency to bear by making funds available to people in smaller bite sizes. Commodities are already a successful real-world asset class, whether that's gold, silver, etc. So we're looking at some of those types of projects. Personally, I'm excited about art. The ability to own a fraction of a Van Gogh has always been something of a kind of idea and a bit of a dream out there. So I think fractional art is a really exciting asset class. But there's no end of things that can be tokenized, and people talk about the tokenization of everything. I think that will come in due course.
And do you think it will happen in 2025? That's when it will become possible?
I'm pretty sure next year is going to be an interesting one. Yeah, we have a lot of hope for 2025 in terms of actually kickstarting, particularly the more tokenized alternative asset structures.
And yeah, like many people are very optimistic here in the UAE, but if we just look at the US, why they've tried several times. They tokenized St. Regis and Aspen, and they also have tried to tokenize some other properties in New York. So it didn't nobody really caught on.
I've been involved in a previous company in the tokenization of a residential real estate project in the US. So I've lived the reality of the US regulatory framework. It's not well suited to the types of projects we're looking at. It's extremely rigorous, those frameworks. That's not a criticism. It's just their design. They're almost designed for large traditional financial players. And as a result, the overhead of doing projects like that is great to show it can be done, but it's very hard to replicate at this point in time. So it can take a year, 2 years, 3 years to actually get a project through the regulatory approvals. That translates into very large sums of money on lawyers and advisors and other things. And at that point in time, it requires a project to be almost a certain scale for it to be worthwhile. And so while the US is one of the jurisdictions where you can actually do this, the reality is what we've been seeing largely have been experiments. Can it be done? Yes, it can. Or digitization of large existing fund products, which is some of the announcements we've seen. So again, it's not a criticism. It's just the regulatory framework there is not really designed for smaller assets.
So it's basically too expensive.
Too slow, too expensive, too much compliance overhead.
And here in the UAE, you would say that it's less expensive or affordable?
We certainly plan on bringing assets to market a lot quicker and a lot more cost effectively than, say, going through a thinner SEC process, yeah.
And just in general, what are you most excited about when it comes to this space? Because you've worked many years trying to make it happen.
Well, I guess we're pretty excited about finally doing it, and actually starting to realize the promise of blockchain to democratize access to finance. There's been a lot of talk about this technology and what it can do. And the technology's been ready for a while, and we've seen that with crypto, and we've seen it with DeFi, the ability to do really, really interesting things. And so for me, what's been really interesting watching crypto, NFTs, meme coins has just been this: people want to get involved. And we now have an opportunity to bring to market something that more people can get involved with, but that actually brings in also some of the rigor, consumer protection, and real-world assets that underpin these new virtual assets. That's what I'm excited about, is finally bringing those to market.
It was a pleasure speaking with you, and I think it's a really interesting space, and I'm excited to see what will happen in 2025 and going forward. And you've provided a lot of insight, so thank you.
Thanks, Lisa. Speak soon.
And thank you so much for watching. We'll be back with more episodes next week. I'm Lisa Amnegard. You're watching Web3 Talks.
Web3.tv